Welcome back to TAXULE News. In today's video, we'll be diving into a key provision of the GST law, Section 17(5) of the Central Goods and Services Tax Act or Cgst Act, and we'll discuss how a recent Supreme Court judgment has impacted industries across India. Let's begin by understanding what Section 17(5) is all about. Under the GST system, businesses can generally claim input tax credit or ITC on goods and services they purchase for their operations. ITC allows businesses to reduce their GST liability by offsetting the tax they've already paid on their inputs against the tax they owe on sales, preventing double taxation. However, there's an important exception. Section 17(5) of the CGST Act blocks businesses from claiming ITC on certain goods and services. A major area impacted by this is the construction of immovable property. The law states that businesses cannot claim ITC on materials and services used to construct buildings or other immovable properties, even if these properties are used for business purposes. Now, why is this a big deal? Let's take industries like shopping malls, hotels, resorts, auditoriums, convention centers, and office complexes as examples. These businesses invest significant sums in constructing their properties. Later, they generate revenue by renting out spaces, whether it's shops in malls, rooms in hotels, or venues in convention centers. But under Section 17(5), they've been blocked from claiming ITC on the construction costs despite paying GST on the rent they collect. This has led to a situation of double taxation. Now let's talk about Supreme Court judgment dated the 3rd of October 2024. In the case of MS Safari Retreats, PV Limited Safari Retreats, a company that built a shopping mall wanted to claim ITC on the GST they paid for the mall's construction. They argued that since they also pay GST on the rent they collect from tenants, it was unfair to deny them ITC on their construction expenses. The Supreme Court agreed, delivering a ruling with huge implications for businesses. The court recognized that denying ITC to companies that use their properties for taxable activities like renting or leasing contradicts the core purpose of GST, which is to avoid cascading taxes. So, what does this mean for different industries? This judgment is a game changer for sectors like real estate, hospitality, shopping malls, multiplexes, warehouses, logistics parks, auditoriums, and convention centers. These industries, which make large investments in constructing immovable properties, can now claim ITC on the GST they pay for construction, which will significantly reduce their tax burden. The impact is twofold. First, it allows businesses to recover a portion of their construction costs, giving them more capital for expansion or other investments. Second, this ruling aligns with the broader GST principle to prevent tax cascading and ensure that tax is only paid on the final output. Moreover, the reduced tax burden could lead to more competitive pricing. For instance, shopping malls could lower rent for retailers, convention centers might reduce venue fees, and hotels could offer more attractive rates. This ripple effect benefits both businesses and consumers across various sectors. In conclusion, Section 17(5) of the CGST Act originally blocked ITC on construction-related expenses. But with this new Supreme Court judgment, industries like auditoriums, convention centers, malls, hotels, and others that use immovable properties for taxable services, like renting or leasing, can now claim ITC, leading to significant cost savings and boosting their competitiveness. That's all for today's video. If you found this explanation useful, don't forget to like, share, and subscribe to TAXULE News for more updates on tax laws and their impact on businesses. Thanks for watching, and we'll see you in the next video.